A few years before the 2008 financial crash, one man quietly walked away from the market while everyone else was celebrating. People laughed at him. Experts called him crazy. Television hosts mocked him. But then the economy collapsed and he became one of the few people on Earth who saw it coming. That man was Michael Burry, and now he's doing something terrifying again. Michael Burry has sold almost all of his stocks. Not some of them, almost all of them. When ordinary investors hear news like this, they usually ignore it, because markets still look strong, headlines still sound positive, people are still making money. Social media is still full of financial gurus telling everyone to buy the dip, but history has a dangerous pattern. Right before major crashes, confidence is usually at its highest, and that's what makes this moment so unsettling. Because Michael Burry is not the type of investor who makes emotional decisions. He doesn't chase hype. He doesn't care about trends. He waits quietly, studies the system, and moves when he sees danger others ignore. So the question is simple. What does he see right now that everyone else doesn't? To understand that, we need to look at the bigger picture, because beneath the surface, the global economy is starting to show cracks. For years, markets were fueled by cheap money. Interest rates stayed low, borrowing became easy, and companies expanded faster than ever. People borrowed money to buy homes, businesses borrowed money to grow, and governments borrowed money to keep economies moving. Everything looked fine, but there was one problem. Most of that growth was built on debt, and debt only feels safe when money is cheap. Now interest rates are higher, loans are more expensive, credit card debt is exploding. Millions of people are struggling with rising costs while pretending everything is normal. This is where things become dangerous, because financial systems don't collapse all at once. They weaken slowly, silently, underneath the surface. And by the time ordinary people notice, it's usually too late. Michael Burry understands this better than most people alive. Back in 2008, everyone believed housing prices could never fall. Banks looked powerful. Investors felt safe, the economy appeared unstoppable, but Burry looked deeper. He saw that the system was filled with weak foundations, and today some people believe he's seeing the same thing again. Look at the stock market right now. A small number of giant companies are carrying almost the entire market. Tech stocks are soaring. Artificial intelligence hype is everywhere. Investors are pouring money into anything connected to AI because they're terrified of missing out. And when fear of missing out controls the market, logic usually disappears. That's how bubbles grow. At first, excitement feels reasonable, then optimism becomes extreme, then people stop asking questions. Eventually, investors begin believing prices can only go higher. That is the most dangerous moment in any financial cycle, because markets don't crash when people are afraid. Markets crash when people become too comfortable. And maybe that's exactly what Michael Burry sees right now, a market filled with confidence, a financial system overloaded with debt, an economy that looks strong on the outside but weak underneath. What makes this even more interesting is how smart money behaves during risky times. Regular people usually panic loudly, but wealthy investors often move quietly. They don't announce fear publicly. They slowly reduce exposure while everyone else keeps celebrating. And that's why Burry's actions matter. Because selling almost everything is not a normal move, especially for someone known for patience. But there's another layer to this story. Human psychology, most people physically cannot believe disaster is possible while things still feel normal. They wait for official confirmation. They wait for the news to tell them there's danger. But by then, the damage is already done. This happened in 2008. People ignored the warning signs because they were making money. Greed blinded them. Comfort blinded them, and the same psychology exists today. Every bubble creates a strange illusion. People begin believing the current moment is permanent. They believe prices will rise forever. They believe technology will solve everything. They believe central banks will always save the market. But history is brutal. Every major crash was once called impossible, and every single time the crowd believed things were different. Now, does this mean Michael Burry is predicting an immediate collapse? Not necessarily. Even great investors cannot perfectly time markets, and Burry himself has been early before, but that's not the real lesson here. The real lesson is caution, because when someone with his history suddenly becomes defensive, it forces people to ask uncomfortable questions. Questions most investors don't want to think about. What if this rally is weaker than it looks? What if debt becomes unmanageable? What if the economy slows faster than expected? What if confidence suddenly disappears? Because confidence is fragile, and financial systems depend on people continuing to believe. The moment fear replaces belief, everything changes. That's why the final stage of every bubble feels almost magical. People feel invincible, risk feels invisible, success feels easy, and warnings sound ridiculous until reality arrives. Then suddenly everyone says the crash was obvious, but it's never obvious before it happens. That's why moments like this matter, not because Michael Burry is always right, but because history shows that the most dangerous time to be careless is when everyone else feels safe. And maybe that's the real reason his actions are making people nervous. Because deep down, people remember what happened the last time the world ignored him. And maybe the real question isn't why Michael Burry sold almost everything. Maybe the real question is, why does the crowd still believe nothing can go wrong?